Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, November 11th, 5:15 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Veterans Day edition of the Revere Roundup Daily Market Insight video. Bond market closed on Veterans Day, stock market open. Not sure why it's open. It really shouldn't be. And special appreciation to all the veterans that have supported our country over the years, over the centuries, really. So let's get into it. Do want to note earlier today I was a guest on Jordan Kimmel's WealthWise program. Not sure when that exactly will be published, but really enjoy talking markets with Jordan. We have a very similar approach to the market, that being there is no reason to give your hard-earned gains back to the market just because the market decides to go lower. He agrees with the William O'Neill approach, and I'll will alert you when that is published. Market state uptrend. You can see the trend gauge over here. We've got the coveted four green arrows, meaning market leaders acting well. If you're in the Bitcoin market leaders, you are. We almost need a darker green color for that, as Bitcoin broke out to new highs and the whole Bitcoin complex blasted off along with that. And all five of the major indexes, really six of the major indexes, as we do include the RSP in there now, because there can be a big divergence between what the market cap weighted and equal cap weighted S&P 500 does. But they're all trending above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average as the market rally continues. But what happened today? Well, after 3 days up, when you get a gap up on the fourth day, that's what we consider a do not chase scenario. High risk for reversal, and we did put in the high within the first 15 minutes. Held up very well, mixed results with leaders. And then, as I mentioned, Bitcoin and the Bitcoin complex really leading the way today. There was some negative news that hit semiconductors, with the administration asking Taiwan Semi to put a cap on the chips and chip equipment that they export to China. That capped the tech part of the rally, and we saw rotation into several different sectors. This is why, again, I say it all the time. This is why we're big proponents of having a core holding in the S&P 500. It really smooths the equity curve. As long as you got stops in place for it, and we talk about those all the time, you're okay in the S&P 500 as long as you're above the 200-day moving average. All bear markets occur below the 200-day moving average. So after 3 days up, we saw that rotation, but small caps continuing to lead. Here are the numbers, and I give two sets of numbers because of the skew in some of the components. So the 21 over 21 list, if you include Bitcoin and MicroStrategy, up an average of 2.3%. If you exclude those and the biggest down stock on the day, the average was about 1.56, still very good. 15 up, one neutral, five down on our 21 over 21 list. We'll review it. Only one change from last week, as they all held up very well. And that change was just because we got a little overweight in the software sector and replaced it with a new buy from last week. The big eight, again, skewed because of Tesla being up 9%. The rest of we were, let's see, six down, two up. The rest of the names, actually three up, five down. So on average, if you exclude Tesla, down 0.45%. If you include it, the average was positive 0.74. The RG8, skewed by RK, has a big holding in Tesla and also Coinbase. So that theme, if you include those, RG8 up an average of 1.69%. If you take out RK, still a very nice 0.94%. The RG8 is something we created 3 years ago to help keep our finger on the pulse of exactly what's going on with growth and momentum names across various market caps. After a nice move up in 2020, we gave back a little more than we wanted to, starting in February of 2021 when rates broke out. and growth stocks really took it on the chin. So the S&P 500 opened up, as I said, gapped up 0.35%, based for about the first cup base for the first 90 minutes, sold off for a couple hours, a little bit of a bounce and a base into the close, but up still positive just by 1/10%. Equal weight, this is what we like to see. When we see the S&P down, we look right to the S&P because that'll tell us if it's rotation or if it's selling. It was rotation, is what we found, with the RSP being up 0.5%. NASDAQ 100 down 0.06. Again, semis hitting that. And the equal weight NASDAQ 100 up by 1/3%. Dow Jones Industrial Average up 0.69%. Mid caps up 0.86. Russell 2000 led the way up 1.5. Global 60/40 bond market closed, so a little bit muted here. Global 60/40 just up 0.06%. Our flagship GROTECTION portfolio up by a little less than 1/3%. Let's get to the charts, and you can see here the S&P 500. You got your big gap up after the election, gap up breakout, another gap up. That was on Wednesday, another gap up on Thursday, another gap up on Friday, another gap up today, but a little bit of a reversal. You can see on a 30-minute chart here, there's that last gap up making a higher high and just consolidating nicely. Nothing wrong with that at all. We continue. You got a lot of leaders that are extended. You got some that are lagging a bit, and you've got some that are really blasting to the upside, uh, well beyond what you would call extended. And those primarily are the Bitcoin complex and Tesla. Tesla benefiting from Elon Musk's involvement in the Trump administration. Here's the NASDAQ 100, slightly down on the day, really has had three tight closes after the second gap up after the election results. Dow Jones Industrial Average making higher highs, closing above that 44,000 level. Very nice. Let's go to mid caps. The S&P 400 mid cap breakaway gap closed a little higher than mid range. So that was where the strength very clearly was today. Note if you look at the relative strength line, it's still lagging, going all the way back to the beginning of the year. So here's your, let's draw the peak of the relative strength line from where it was then to where it was now, and then compare that to price. Any price chart without a relative strength line on it is, you're only looking at half a chart and they can be extremely misleading. Let's go to small caps now. Russell 2000, breakaway close in the top third of the range. Very constructive action there. Let's go to the equal weight S&P 500. Closed positively, as I said, not quite as strong as the market cap weighted, but not relative strength, not confirming the high. But if we see money come out of the big cap tech names um, and into other sectors, that might start showing relative strength. So that's the major indexes. Let's go to the VIX now. We're very happy to see this with a 14 handle. Big gap down after angst going into the election. Very well deserved, of course. But pulling back, we like to see this below that 16 level, and that's where it is. That's the VIX. How about the dollar? One of the questions last week was, did the dollar top? The answer is no, making a higher high after the election. Trump does not like a strong dollar. He understands the lag that it is on exports. So that's the dollar. How did that impact gold and silver stocks? Well, it looks like Bitcoin is the new digital gold, as massive underperformance on gold since the election. We had the gap down, reflex bounce into, and you see this all the time. You break the 21 rolls over, it acts as resistance on the bounce and making a lower low with a close below the 50-day moving average today in gold. Gold stocks, even worse, down 5.9%. These are just a mess now, and that's just very clearly a failed breakout a few weeks back. Silver I know it's an industrial metal, but it's still making lower lows, down 1.8%. Bitcoin, there's the big gap, close at the top of the range. Um, Gap after out of the base after the election and already up 20% from that pivot, showing some extreme strength. On to bonds now. As I said, the bond market was closed. So not a lot of small range here on the broad bond index, down zero point 0.2. TLT, a little bit of a bigger range, down 0.49. And again, one of the cues that we were looking at, or the keys, was this morning star pattern in TLT. It's actually just the reversal of rates, and we'll look at that now with the TYX. That's an evening star pattern, and rates top long-term rates have topped as of now. We're still keeping an eye on this. So the dollar made a higher high, but rates have not. That's our tail of the or sorry, that's our inner asset correlation. This is the tail of the tape, and there's a lot of friendly data here. One thing we are concerned about is later on in the week, because there's nothing to change sentiment like price. We're very curious what the bull bear and NAAIM numbers are going to be when they come out on Thursday. Mentioned Bitcoin keys for today. S&P above 5950, check. NASDAQ 100 above 510 support, check. Top in rates, no. Top in the dollar, or sorry, top in rates, yes for now. Top in the dollar, no, as that made a higher high. And also, percent of stocks above the 5-day moving average is getting a little stretched to the upside. It's above that 70 level. Uh, we've seen it higher, but so the up arrow is in yellow as mild cause for concern. Again, these are secondary indicators. Day count from up three to up three with a consolidation day. 5 days above the 8 and the 21 exponential moving averages on the NASDAQ 100 and the S&P 500. Standout sectors today, besides the dollar, mostly oils and banks. To the downside, gold, and silver stocks, and semiconductors. Portfolio changes. We added to 2 positions. We added to Bros and Dell. Bros initially reversed when we bought it on Thursday, held the bottom of the gap, bounced nicely off the bottom of the gap Friday, and continued a bit higher today. And Dell attempted to break out over 140 on some positive news early in the day. I think from either JP Morgan or Morgan Stanley. Pulled back a bit, showed some strength into the close. So these two adds kick up our adjusted beta from 1.38 to 1.46. Bottom line for the market after 3 days up, rotation day, very normal. And semiconductors got hit. Small caps led the way today. We'll keep the same 4 keys going into tomorrow. Let's look at the 21 over 21 list. And it does include 2 very strong names. There are multiple other strong names tied to the Bitcoin complex. But let's go in order of highest to lowest. And we'll start off, of course, with MicroStrategy. This has been stretched several times, and we do offensive sells. It's making us look like idiots for doing those offensive sells as it continues to go higher. And this is why one of the rules that we have is our last sell closing something out needs to be a defensive sell. So basically, we're just leaving a runner with this, letting it go as high as it can before it breaks a moving average. We may trim some more because of how just ridiculously extended it is going to be. But sometimes these moves, you just don't know how high they're going to go. And that's one of the wonderful and yet maddening thing about the markets. And Bitcoin also in our 21 over 21, we already showed this chart. You see the clear gap out of the base and then another gap today, continuing strength. LNG added this last week. Would have been a nice buy around that 200 level, getting a bit extended right now. EQT also could be in here as a nice oil and gas play. These are sorted, by the way, in percent price change on the day. And if it's got the green flag over here, that means we own it in our portfolio. Team following through to the upside after its earnings gap. Dell going sideways after a little gap higher on the election. Two pullback days. Gapped up this morning, gave it back a little bit of strength into the close. This is a very nice setup here. And with SMCI just and all their accounting struggles and the stock just falling apart, this is the leader in servers for AI data centers. Palantir continues to blast higher 5 days up after its earnings gap. Dutch Brothers, I mentioned we bought this on the gap. That gap failed intraday. Well, it didn't fail, held the bottom of the range, but closed near the bottom of the range. But looking at the behavior of this over the last three or four earnings reports, it tended to fade and then have strength in the follow-up days. And that's what we're seeing, and that's why we added to our position today. Carvana pulled back to the 8, bounced off there just like you want to see. XBO continuing making a higher high after two gaps, one on earnings, one on the election. Twilio, just a beast, up 20% now since its gap out of its base on earnings. Toast with a nice day two follow-up after its earnings report. Sprouts continuing to work its way higher. Deckers, not as strong as some of the other ones, but representing the retail sector in here, looking good. VRT undercut the 21 last week after its earnings report. Money came in after that, making higher highs. Kava, finding some resistance at that 150 level, and it's got earnings tomorrow. Hart, also with earnings tomorrow, found resistance at that 50 level. You see this all the time. Those are Livermore or half Livermore levels. Celestica, outside negative reversal, but due to take a break after its strength. NVIDIA pulling back at that, again, that 150 level, 1.5 Livermore level. And general pullback on below average earnings or below average volume. It's got earnings in 2 weeks. SMR trades wild. Gap down was down as much as 9%, regained most of that, but still down on the day. Reddit pulling back after a nice move higher on earnings. And Astera Labs, very volatile, hit that again, Livermore level 100, reversed but held the 8-day moving average. Rose was the one that was added this week, the one that was cut, and there's absolutely nothing wrong with it. Roblox continuing its way higher. It's just that we already had four software stocks in there, and we wanted to get Bros in there as a retail name, and decided to take this one out. I mean, really, there are hundreds of stocks that could be in the 21 over 21 list. And that's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Our flagship portfolio is named GROTECTION because it's got a dual mandate. Grow assets in uptrends, protect them during downtrends. Never know how far down a downtrend is going to go. All 20% losses start off as 10% losses. All 10% losses start off as 5% losses. That's why we track the markets across 3 time frames. Didn't know that this initial 5% loss in 2022 was going to turn into a 28% drawdown. Not at Revere, though, because we've got rules to get us out, especially when you're below this black line. That's the 200-day / 40-week moving average. This is where all bear markets occur. Stay engaged above there. Use your stops for individual names, but stick with the index if it's healthy above the 200-day. And with that, I'll wrap it for Monday, November 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.